S&P at 54.45. Kevin Green joining us to take a look at the technicals and the options flow into the close and for the rest of this week. So, Kevin, all right, yesterday was really impressive. Today, less so, but not bad at all, really. I mean, we're solid here.
Yeah, we're still on the right track here to try to move higher over the next couple of trading sessions here, Oliver. And actually, we did see a little bit of an adjustment when it came to the open interest. We kind of talked about that 54.50 area yesterday as an intermediate resistance zone, and we did actually bounce off of that a couple of times. We actually went through it earlier this morning and then quickly failed, and we just tried to test it again and failed it again. So that probably would be your big area of resistance going into the close here today. But one thing to just kind of note, we are seeing this kind of like rotation that's actually occurring here. And you can see that on the open interest where we had a lot of focus basically at that 54.50 area. But now we're starting to see those positions roll to the upside. This is what you want to see in a bull market. You have a position, the market actually closes or gets really close to that position as far as the strike price, and then you start seeing those institutions roll it out. And that's what we actually can illustrate in this chart right here. Also notice the 5,400 level on the left-hand side. A lot of puts were also rolled up today as well. So there is some protection that is being put in for the report tomorrow for initial claims, but not as aggressive as we are seeing the bull movement to the upside overall when you're looking at SPX total volume and total open interest.
Okay. All right. So that's generally positive, right? Kind of pulling that kind of center of gravity up in the market is always welcome.
Yeah, definitely. Yeah, this is exactly what you want to see, especially if you're trying to make new all-time highs here. And it doesn't, we aren't seeing anything that reflects that maybe this could be in jeopardy right now. We kind of talked about some technical levels yesterday. The 20-day moving average for the S&P 500 seems like we've been able to break above that. That was a critical area. The next one's going to be the 50-day SMA, which is pretty much where we're at right now, give or take a couple of points. That's going to be another critical area of resistance. But if you're able to break through that, then it kind of looks like we could try to track higher. And just looking at the larger flows for today, Oliver, a lot of 5,600 calls being put out there for September monthly expiration, 5,600. Okay, so we are getting the bigger flows, those that are trying to that are taking in $2 million, $3 million, $4 million per trade here are really structuring for a longer term grind to the upside here. They're not really concerned about the short term movement to the downside that we've seen over the last week.
Okay. So looking like there's some pull upwards. That's the S&P, of course, we're looking at. The rest of the market's a little bit dicey here today. We got a pretty ugly fade in the Russell. Qs are having a little trouble here. NASDAQ is mixed in the Mag 7. You got the alphabet thing. So, I mean, we're looking at S&Ps, but stories was complex when we brought it out, I feel like.
Yeah, well, especially for today, too, if you kind of look at what's leading the market, it's really a lot of the defensive sectors that are out there, or even the interest rate sensitive sectors that are out there. So financials, real estate, I saw earlier. I saw utilities catching a little bit of a bid. So that's not really the constructive nature that you would want for a bull market. But at the end of the day, if the price is advancing, that's really what you want to see. And sometimes it just takes some time to really catch up. We also have NVIDIA earnings coming out next week, too. So that could be a catalyst for a move to the upside for technology. And the reason why I say is still looking very bullish and every single day it's getting better and better is because you're also looking at volatility moving to the downside too. And in a higher regime type of vol regime, if you will, the intraday action gets really choppy, light volume, which we have had, but it doesn't seem like it's as aggressive as we've seen in the past 10 years or 15 years where we have market tops.
Okay. VIX, looking at volatility. I know you have been as well, VVIX, but that's a really key point, right? Is that the swings have just gotten smaller here. You know, even when we had stocks down, VIX was down as well. But looking at the vol of vol to VIX, tell me what you see here, because that seems to be kind of more trending higher.
Yeah, so this is just providing you a little bit of a longer term perspective. So this is a 10-year weekly chart. It takes the S&P 500, which is the candle chart, versus the VVIX to VIX ratio. And that really is just trying to show is volatility really being priced into the VIX in general. And so the higher that blue line, that just means that the VVIX is kind of stabilized and the VIX itself is actually relatively low. And this snapback that we've had over the last week is probably one of the faster and more aggressive bottoms that we've seen seeing in this ratio chart. But one thing to also kind of note, we are still in an uptrend. So it just shows that the complacency is still in this market. We're not trading at a top with higher volatility, but still advancing prices. We're still trading in a regime right now where it's the market's really not concerned over the longer term when you're looking at this VIX structure that we might be hitting a wall in this market. And every time that we actually see a divergence in those tops where we have advancing markets, but volatility is still elevated on a relative basis for the VIX, that's when we generally see a pullback of the market around 2 months, 3 months later. We just don't have that divergence yet. And if we have it, and it does show up, we're going to keep track of this chart. I have it saved. Then I'll definitely let you guys know. But right now, this still seems like the bull market trend from the lows that we had in October is still intact. Nothing changes with that spike in the VIX from last week.
Okay. All right, nice. So we're recovering both volatility-wise, index-wise. Swings kind of muted here, but we're not completely back to normal. But we're getting close. We're getting close. So coming back to the kind of short-term look at the technicals here, some degree of rejection today, though, for S&P, a little bit higher from here. That also probably can't be ignored, right? Like we kind of did try to make a big move earlier and it fell flat.
Yeah, but it's been on our radar for the last couple of days. I mean, that positioning, even though we were looking maybe 3 days ago, 5450 has been on our radar. We knew that there was going to be a really big area of resistance there. Now, until you can actually break above it and continue to see those individuals kind of roll up and roll out, it's going to be an area of resistance. For today, if you're looking at it from a technical standpoint, we are kind of breaking down out of this channel, but you don't want to make a lower low, meaning you don't want to make a lower low at around 54.35. We break below 54.35, then you can look at 54.20 as kind of being that negative gamma area that you would want to see buyers really stepping in. This feels like a market that really wants to try to hang out at that balance area, stay in that positive gamma territory. Now, we did see net convexity basically just fall off a cliff, just meaning that the premium basically flipped for calls and puts over the last 5 minutes, which is not really too big of a problem because the put volume is really low for today, but it's going to be a slow grind. I would say 54.40 could be your area where the market really wants to try to settle out at. I don't see any type of bear flows showing up, at least over the last 20 minutes.
Okay. All right. Seems like we're in okay shape, but still kind of, a grind tomorrow ahead of us, given that we haven't really popped through that level there that we were just looking at. So, all right. Probably not going to happen today, I guess, but tomorrow, if things go well, we get some fresh energy for this with a good jobless number, retail, then we're already dabbling with these levels. So it seems like the appetite is there to try and break through even further, just not happening today.
Yeah, and one thing to note too, so we're all focused on the jobs number, right? The initial claims are probably going to be the headline over the next 3 months as we figure out Fed policy. If we were truly concerned, though, Oliver, we would actually see the VIX elevated, and we actually did see it drop. Now, earlier this morning, you and I had a private conversation where we were kind of talking about, hey, VIX up, or VIX down, SPX down. We don't like those correlations, right? But we did see the SPMP try to, at least try to stay positive here for today. But if we had a really big concern about the initial claims number tomorrow, we would have had an elevated VIX going into this, or even seeing a positive VIX going into that number. It just doesn't seem like that's going to happen.
Okay. All right. Good stuff. Kevin Green, nice analysis. Thank you, sir.